Mark, I know you wrote another article, albeit a while ago, talking about, a Bitcoin dollar, as you called it. And you were referencing it kind of in reference to the petrodollar, where the dollar's been backed by Saudi Arabia and the petro or the oil that they have there, basically pricing everything in dollars. And I think you were kind of comparing that to like this Bitcoin dollar. Why don't you frame that up for us a little bit?
Yeah, no, I think you did a great job. It's kind of an allegory to the petrodollar. So this idea that the U.S. in order to fight inflationary effects of an increased monetary supply from the Nixon shock in '71, going off the gold standard, they did a whole bunch of military imperialism in the Middle East and established an economic monopoly on petrol and oil, and basically created a furnace to shove all of this dollar demand, because all of these industrial nations in Asia and Europe needed oil. So they were able to sort of offshore their debt and inflationary effects. And so the argument now, this thesis, and I've expanded it actually into a book that's coming out called The Bitcoin Dollar, is sort of this idea that the U.S. government is actually incentivized due to this runaway debt service, inflation that's happening, to find a demand elastic commodity, an energy commodity, to peg itself to. And so we're seeing right now sort of a recreation of that mechanism of on-ramps and off-ramps to Bitcoin being predominantly U.S. dollar denominated. Huge USD pairings, huge volume on these USD pairings for Bitcoin. Strong majority of volume is coming from, KYC, dollar account inputs. So that's sort of the argument that, there's an economic incentive for, the U.S. to tether themselves to Bitcoin. And I think what we're seeing now with this regulatory regime and this post-FTX sort of stablecoin war, we're seeing the kingmakers being made. We're seeing the regulatory regime sort of choosing who gets to be the issuers of these, the oncoming billions and billions, if not trillions, of stablecoins that will be issued when, private banks start buying U.S. treasuries and start issuing stable coins. So I really think the dollar and Bitcoin are going to be the huge players, certainly, for the rest of the year, and probably for the rest of the decade, and possibly even a little bit more than that. So I'm really focusing on the dollar, learning a lot about it. I think Bitcoin and the dollar are just very strange bedfellows. There's a lot to dig into there for sure.
Yeah, it's interesting. I covered earlier the story that everybody kind of in the Bitcoin community is kind of freaking out because the U.S. is potentially looks like they're about to go dump a bunch of Bitcoin into the market. They had $1 billion worth of Bitcoin that they transferred over to Coinbase wallets and some of the government wallets as well. And so investors are thinking that they're probably going to go dump that, which historically, they haven't done that. They've sold it off in auctions, and no smart seller would ever go just dump that into the market anyway, unless they potentially wanted to come down. So that's probably not the case. But then I was looking up some of the, we don't know for sure, but some of the other governments' holdings of Bitcoin. And the U.S. government has quite a bit of Bitcoin on the books, but some nations like China look like they have like 200,000 Bitcoin on their books. And it's sort of like Jason Lowery has been talking about, the strategic interests of a nation to acquire Bitcoin. I think he's talking about it more from a mining standpoint, but that's more of it on its books. I saw Bitcoin Magazine on Twitter had put out something about the Biden admin proposing a 30% tax on electricity used for Bitcoin mining. So I don't know which way they want to go here, man. It's like on one hand, it would make sense to have it, control it. Even, maybe if there's a small chance it takes off, maybe we should kind of have it. But, I mean, if they put a 30% tax on it, I mean, it's just going to go overseas again somewhere, right? I mean, that's the economic interest.
Right, or it allows them to create loopholes for the companies and personnel
Yeah.
and VC interest. Again, this is the U.S. dollar system is all about retaining purchasing economy and making as much money for the quintillionaires as possible. I mean, we've seen this time and time again. Anytime there's debt issues or inflation issues, up pops a war. Up rises taxes, and here we are, and we're at actually sort of an economic breaking point, where now just the interest on our debt service in a year is now actually over our military spending.
Right.
So we're actually spending more money to pay for our dollar than we are to pay for the military that's holding up the dollar theoretically. So we're in sort of uncharted territories where we're Roadrunner that's run off the cliff.
Yeah.
We'll see who gets made king and who gets to sort of run the retail CBDC, I guess.
Yeah, I hadn't really thought about it like that. I mean, and obviously I should have, but I mean, to your point, right? It's king making. You said that earlier, picking and choosing winners. So everybody has to pay a 30% tax except for you guys over here.
Right.
You don't have to, or we don't have to, sort of a thing. So that could be interesting, but. To the point that you made too about running kind of the government off the cliff, it's like the Fed is trying to, not trying to, they have raised rates higher and faster than any time in history, trying to crush inflation, but they haven't been able to crush inflation, but they have managed to crush the government, and the government's broke. And of the $31.5 trillion of debt, 30% of that has to be refinanced in the next year at the new rates. 50% of it has to be refinanced in the next 3 years at the new rate. And so that's going to push the interest payments up, who knows? It's right now an average of 1.7%. That would put it, it's different rates at different maturities, but it pushes it between a 3.5% to a 5.5% number, which could potentially take us from about a $900 billion of interest expense to 1.8 trillion.
Yep.
In interest expense, and that's a big problem.
Mm-hmm. Yep. I mean, we're Bitcoiners. Compounding annual growth rate. Little CAGR. You don't want that running wild in your your debt. So, and that's exactly what's happening. So, yeah, to your point, I mean. We're going to have to deal with that mathematical reality. I don't know when that will happen, but obviously we will need to create money to pay that debt. There's no way we can make enough off tax receipts, even with the insanity of the capital gains threats that they're saying in the last couple of days. It won't even come close.
Yeah.
So printing will have to come at some point. We'll see what happens till we get there, but it's going to be a hell of a ride.
Yeah, well, and the other problem is that the expense column is going up, right? The interest on the debt is going up. The spending is also going up, but the tax receipts are going down. So to your point, they want to put in all these new tax things because the tax rates are going down because the Fed is crushing demand by making everybody poor, and then everyone's poor, so then there's no taxes. And then the tax rates, so in California, corporate tax rates are down 20%. Statewide, it's down 40%. In the U.S., it's down 9%. That's a big drop. And then I saw this chart last week I was looking at, and it showed no matter what the tax rate is, the government typically gets the taxes typically come out to about 19% of GDP. So tax rates up, tax rates down. The share is about the same. So the goal should try to be to get the GDP bigger, not just the tax share bigger. But it's going to be interesting to see how that plays out. If you're just tuning in, you're listening to The Mark Moss Show. Of course, each and every week talking about the decentralized revolution. I've been talking to Mark Goodwin. He's the director of print editorial at Bitcoin Magazine. Definitely check that out, bitcoinmagazine.com. And give him a follow on Twitter at @MarkGoodwin_IN. Of course, I'm at @1MarkMoss. That's what we got for today. Hopefully you enjoyed it. Shoot us a message, let me know. Thanks for listening.